Hi, I'm Matt Bell, Chief Economist at Oliver Hume Group, and we've just released our latest quarterly market insights. Since our last outlook, we've had the Liberation Day tariff shock and a federal election. At a national level, the outlook for the land market is still probably as strong as it's been since rates began rising in mid-2022. There's still plenty of demand for new housing around the country. We've seen the market move from forecasting 2 further rate cuts by December to currently pricing in nearly 5 25 basis point rate cuts, and that's clearly a positive for property markets. While we didn't see big changes in volumes in the March quarter, we did see some pickup in activity in the later months of the quarter. We continue to believe that we've passed the bottom of the national land sales cycle and that we'll see growth in land sales and prices in 2025 in most markets around the country. In Melbourne, March quarter sales volumes rose for the second consecutive quarter to the highest level in 2.5 years, but are still well below long-term levels. Median lot price in Melbourne rose back up to $408,000 in March from $405,000 in the December quarter, but was essentially flat over the year and down in net terms as rebates and incentives remain high. Victoria's been the weakest land market in the country for 3 years now, and it has some of the most unique challenges, but also has the most to gain in any upswing. Underlying demand is still strong and affordability is the best it's been in decades compared to other states. On the downside, there's still plenty of secondary market stock out there to compete with new developments. But interest rate falls are powerful, and we do expect some recovery in both sales volumes and headline prices through the remainder of 2025. In South East Queensland, the strongest East Coast market, we saw steady land sales in the March quarter at around long-term levels, but down slightly on what was averaged through 2024. Price growth, on the other hand, had remained very strong. Median prices rose 11% in the March quarter alone, to the highest level on record. Annual price growth hit about 27%. So South East Queensland's historical affordability advantage over Melbourne was completely eroded, with the median land price going above that of Melbourne for the first time on record and by nearly $30,000. That strong price growth may be a bit of a headwind for the rest of 2025, even with 4 or 5 rate cuts coming, but demand is still strong, and we expect sales volumes likely to hold, if not push above average levels. While price growth should moderate, it will remain positive. For Adelaide, sales volumes for the March quarter fell to the lowest level in more than 4 years, actually. But like South East Queensland, price growth was very strong for the second consecutive quarter, up 9% in the quarter, up 21% for the year. So there's plenty of demand around. Right now, it's a supply side holding back volumes. Adelaide land prices remain significantly more affordable than both Melbourne and South East Queensland. So with that continued strong demand, we expect prices to continue to rise the remainder of the year and some bounce back in volumes. Look, that's all for this edition. Don't forget to head to the Oliver Hume website to download the latest edition of the QMI. Thanks for your time, and I'll see you next quarter.